this room, for those of you that plays paddle, there's normally a center court here, and I've always wanted to play on this, and I've never been able to do that, so at least this is second best being on the stage here. They've cleared this out for us today. Thanks so much, everyone. This is very excited to be here today. I think before we jump in, I want to give the panelists an opportunity to introduce yourself. I think that's the best way for the audience to get to know who's on this panel. We're privileged today to have a really broad spectrum of knowledge on this stage across various industries, and I'm really excited to hear what we're going to have. I want to start with you and then move all the way through to David. Just short introductions.
Thanks, Dewald. Hi, guys. My name is Mohammed, better known as Mo. I look after the FinTech and Enabler segment for Mastercard across Eastern Europe, Middle East, and Africa. So if you know Mastercard, if you don't, our logo's on your name tag. But Mastercard's been around for over 50 years. I'm going to use our famous boilerplate. We're not a card company. Even though card is in the name, we're definitely not a card company. We're a payments network. And I'm going to keep saying that, so you guys go home today knowing that we are a payments network, enabling payments across multiple geographies. And I'm fortunate enough to head up a very exciting segment and grow the segment across the region. Thank you.
Yeah.
Thanks, Mo. Hard to follow. My name is Peter. I'm a former actuary, a failed actuary if you ask some. Running a unit in Sanlam's new fintech area, which is quite a loose mandate, but essentially trying to figure out real commercial applications for AI and large language models. So it was a job that I asked for, and now I have days where it's less cool than it sounds, but let's see how it goes.
So my name is Paulina. I've been multiple years at the TLG Group, which is Travel Start, so massive e-commerce player in South Africa. And we took payments so seriously that we founded our own fintech, which I'm now the CEO and founder of, and that's Glyde Pay, and we facilitate payments on behalf of the travel industry. So we thought fintech would be a lot more cool and modern than travel tech. And since then, I have learned otherwise. So there's a lot of similarities between those two industries, which we'll get into a little bit.
Hi, my name is David. I guess I've had a colorful, kind of last few years. Started out in food, built a business called YouCook, had a brief stint in payments, and as well as cosmetics, and now I'm building a off-price retail platform that helps global fashion brands solve an excess problem and makes branded fashion accessible in Africa.
David, I partly blame you for my poor cooking skills because of YouCook. I think having said this, today's topic is very, it can be quite broad. So I'll just go through it again. It's disruptive tech and payments, the impact of AI, ML, and blockchain. Now, last night when I thought about how to start this, I thought the best way is probably to see, is there a way I can incorporate AI in this discussion today? So those of you, I think most of you will know OpenAI. They've got an ability where you can generate images by basically putting in a tagline, and it'll then generate an image based on looking at those words. And I thought I'd give it a go. So the first thing that I put into the search bar was disruptive tech and AI and payments, and see what picture got generated. So this was the result. Now, at a glance, this looks very strange, and I thought I would skip it, but then I looked into it in a bit more detail. So what you have here is an iPad, and next to it, what looks like a gold bar with some sort of an extension that plugs into the iPad, almost like a USB. Didn't make a lot of sense. It looked like a bit of gibberish. But then I also realized that gold bar looked a bit like a vaping device. So I had to, our resident expert at Stitch, who loves vaping, I had to confirm with him that there is no golden vape available. So clearly this didn't make sense. I realized I need to get a bit more firm with my search words and my code. So I went on, and the next thing I put in was seamless and fast payments. This was the result that came up. It's basically something that looks like a Nokia 2210 that allows you to pay with cash. We've not seen that before, and again, I was a bit disappointed in seeing the results in this, and clearly it's not good. And then at the end, I realized, let's just look at the outcome that we want from payments. And the outcome is happy payments, happy clients. And this was the end result. Those of you that can't see, it's a group of ladies sitting around a table with a card smiling at one another. I was very disappointed in these results and realized like the application of AI and machine learning is not as easy to apply in specific places, and like there's a lot of thinking that needs to go into it. At this stage, I started doing a bit of retrospective, and I thought about myself, and I just put in for fun, best panel moderator in the world, and what came up was this guy. You can't see him. He's got a bow tie over a tie. I looked into my cupboard to see if I can find that. I did not. And I can also tell you, Sam Altman is waking up this morning with one less subscriber to OpenAI. This being said, I think the risk of a broad topic like this today is that we end up leaving with just more buzzwords around AI, the application of it, and we all basically end up with more golden vapes. And I want to make sure today we go into more practical details around what that looks like in corporations. I know there's a lot of directors sitting here today. How do we really incorporate the thinking around all of these new innovations into our different business units and then taking it from there? And I want to start off with you, Paulina. I think before we jump into what we currently see is, I think what might be useful is to go back to the past and see what actual disruption has looked like and how it's been implemented. I think there's a understanding that there's a lot of noise in the market that tomorrow you're going to wake up and there's going to be big change. But is that actually the case if we look at how disruption in the past has evolved, even before AI was prevalent in the market? So, Paulina, like from your experience at TravelStart, you've seen everything and how evolvement has happened. Tell us a bit more about how past innovation has happened and like what's the realities around adopting new innovations and looking at it.
So it's always interesting to see who's pushing the innovation. So for example, back in 2006 thereabouts, Pazza decided that 3D Secure was going to become like a thing. And I don't know who was around trying to implement payment gateways back then, but they would have seen that pretty much all their transactions would have failed. Because even though the regulatory bodies and the banks and everyone was like, this sounds like a fantastic idea and is going to cut fraud, the banks that were issuing the cards weren't kind of on the same page. So no consumers actually had cards which were enabled for 3D Secure. So a lot of this innovation that we speak of, it takes a long time for it kind of to permeate the entire value chain, which I think was spoken a bit about in the previous panel, that, we're pushing innovation on the consumer front, which is great, always, finding new ways to pay, but the problem is the rest of the value chain is stuck in the dark ages. And it's always interesting to participate in panels around fintech because all the conversation is always about the innovation and disruption on how consumers can pay. One keeps forgetting that at the end of the day, for example, the merchants still need to disperse those funds to their suppliers. And, as awesome as, instant payment is, because it's really fast to add in your credit card, one forgets that the actual payment settlement might happen 3 weeks later to the end player. I was actually on a panel with, not on a panel, but at a conference with Mastercard, and they had the most amazing comment. They said, payments happen, everyone talks about, instant payments, etc. But when you order pizza, you know exactly where the process is. Pizza's been ordered, it's being made, it's being delivered, etc. You make a payment transfer of $100,000 across border and the money disappears for 2 weeks. And we're all here talking about instant, fast, efficient payments, but, we still have problems doing an EFT on a Sunday. So, let's maybe recalibrate how we think about innovation and disruption and maybe move it into other areas of the value stream. That was a longer answer than you probably wanted.
That's amazing. I have not thought about pizza delivery and payments like that. That's going to stick with me. Peter, moving to you, I had the privilege of working a bit with you back when you were at Sanlam Indy. So Peter was one of the regional founders of Sanlam Indy, the digital arm of Sanlam on the insurance side. And I think what's interesting about insurance, it's probably one of the services out there that's the most tightly coupled, the end product that the user gets is the most tightly coupled with the payment journey and the payment behavior of a user. Tell us a bit more about what you've seen in the payment side in terms of involvement in insurance that's traditionally quite a slow market to adapt because of regulatory changes, and then what are the different areas from a payment side that you see disruptive technology that like AI, machine learning can really help solve problem areas in the payment space given the construct of insurance policies?
How much time do you have? Okay, payments, I mean, insurance is, you should think of insurance as kind of a subscription business. It's no different from a Netflix or your Spotify subscription. As we sell a service, which is risk transfer, and then you pay for that service regularly over time, typically via debit order. I mean, obviously payments is critical for that service because we also invest a huge amount of money up front, typically writing the policy through commissions or underwriting and things like that. And then we need to recover that money, hopefully over, say, the next 10 plus years. So, funnily enough, there hasn't been, like you said, a lot of innovation around payments in insurance because it was the middle market and upper middle market. Payments is not really that big of a problem. You get a debit order mandate, and if there's money in the account, you collect, and that's okay. It's actually in the lower end of the market where payments becomes very, very difficult. So the way I think about it is that there's one fish in the lake, but there's 6 fishermen, and everyone wants that fish, and that's what it's like collecting payments in the lower end of the market on a recurring basis, because the reality is that the demand for that money exceeds supply. So then what lands up happening is payments becomes a bit of an art around the timing of the payments, the time of the day you do it, the date itself, the reminders or the interactions you have with the client before and after the payments. And like I said to you earlier, if you don't want your house to be broken into, just have slightly better security or a slightly bigger dog than your neighbor. It's the same thing with payments. As you just the innovation happens at the pace of the next worst player. So you just have to be slightly better because then you'll catch the fish. So it doesn't really help to be 10x better on the first collection. You just have to be better than your competitor, but then bearing in mind our competitors are anyone trying to get that money. So DSTV. If you know what I mean. So, and I mean, obviously the unfortunate thing about insurance is that we can cancel your service, but you wouldn't notice. So it's not like your Netflix doesn't load because you haven't paid. It's like, well, if something bad happens, okay, so it's not as powerful a message. So that's the one element, obviously. And I mean, for a payments conference, what isn't nice to tell people is that the absolute best way to collect money from insurance is on a stop order, because you get that money before it even gets to the bank accounts, which is the dream, right? So that's the collection side. And then to wrap it up, where I think a lot of the innovation is now happening is what happens when you don't collect that money. So that's about engaging with the customer, giving them a lot of optionality to say, well, you don't have to pay the full amount this month. If you want to make a partial payment, we can do this. But that becomes tricky because your product needs to be flexible enough to be able to enable that level of payment flexibility. And typically they haven't been.
So I wanted to quickly ask you that because I assume most of you are aware of how insurance policies work, but there are lapse rules. So if you don't pay twice, you lose your policy. Payments innovation will have to follow the innovation in the policy cycle. But like, is the egg or the chicken? Like, how do you manifest that change? We actually realize today we've got the ability to have more flexible policies, where if somebody don't pay this month, you have structure where somebody can have a half payment, but that doesn't impact their policy and the outcome of their claim. How do you bring that change in an organization, in an industry that's been like very slow, and where first principally the policy has been the master element of it? And yeah.
So the change, the lack in change is not so much a reluctance for the people inside to change. It's typically the technology itself. So I don't know how many number of Sanlam systems are still running on old mainframes. For the technologists in the room, those are quite hard to change. And typically the payments is often also sitting within your administration system itself, which is a nightmare. So a lot of the stuff, you're right, but it has to happen in conjunction. It's not one or the other. But ultimately it comes down to an increased focus on the client. So this is flexibility for the client is good for the client, full stop. It leads to the ability to collect premiums more effectively and give them more optionality. And maybe just one point on where the AI can come in. A lot of it is actually just being able to engage with the clients in real time and give them that optionality. But there's a bizarre scenario we've seen before where if you remind someone their payment is coming up, that can go both ways. So sometimes they're like, great, they will make sure the money's available, but other times they're like, oh, not today, and they and they eliminate.
And a policy gets cancelled or whatever
Yeah,
the case might be.
exactly.
Sure. It's fascinating. David, moving to you and specific focus on user, I think Peter touched on it, how important the user behaviors are. In the higher income market of insurance, like it's pretty straightforward because there's debit orders that run, and most of the time you don't compete against a lot of people to collect that premium at the end of the month. Tell us a bit more about what you are currently up to with the new clothing business. I think what's great about it when we spoke is the component AI is playing in that element in the business itself. And then how are you thinking about complementing that with a really good payments journey specifically focused on the end users?
Cool. First of all, thank you for the kind steer in a direction that doesn't feel kind of like I'm definitely the kind of candidate here that has the lowest domain knowledge on payments. So very happy to talk about ML in the space that we're in now. So look, I think I don't know if anyone is familiar with off-price retail. It's quite a specific kind of niche thing, but maybe just a kind of quick download. So we buy up overstock and returns from fashion brands and marketplaces globally. A lot of that ends up kind of being disposed of or kind of shredded, and that's because people don't. There's a cannibalization issue. There's not actually really a waste problem. Like brands have lots of off-takers for their excess. They just don't want to sell it into primary markets and cannibalize existing trade. Now that inventory is incredible because it's really cheap. Like the average cost of a garment is like $3, 3% of retail. So you're buying it for almost 10% of the cost to produce, which is obviously a great solution for Africa because value is the fundamental component that I guess moves the economy. And what's interesting about it from a data perspective is that you have the biggest advantage is also the biggest problem. You're buying an inventory with absolutely no consistency. So there's no size curve. There's almost 98% uniqueness. We have 110,000 garments in our warehouse at the moment, and roughly around 100,000 of those are one-offs. So I guess what's interesting about this is if you think about fashion is an emulation game. It's very, very much kind of trend and style focused. There's a specific set of colors, there's a specific set of silhouettes, and the market is ultimately built up on those pillars. We buy inventory that's sometimes kind of 3-4 years. So it's very, very broad, it's very, very distributed, and we're exposing customers to a huge amount of newness. So customers, unlike in a traditional kind of retail environment, are exposed to a very, very mixed assortment of inventory. In a typical store or hub, we would hold between 7,000 to 16,000 unique garments. So customers making specific decisions are probably making decisions that give us a very, very accurate understanding of what their true preference is. Now, if you're able to kind of capture the data on a garment level and really, really granulate that so you understand, brand, size, detailing, so chrome zips, the more granular, the better. And then you would overlay that with transactional data, you can start actually understanding whether or not a lot, so you'd buy, say, ASOS returns, and it would be from a specific week, is going to sell or not. You can also start automating planning. So which garments have the highest likelihood of success based on the kind of transactional data that we've aggregated on a customer level. So you can I guess, understand customer preference in a very interesting way and automate probably the two hardest things in the two hardest competencies that we need to build, which are buying and planning. That would be, I guess, some ML data utilization in Faro. If I were to think about payments, look, I mean, we are transacting with the kind of lowest common denominator. We're interfacing with a customer that's incredibly cash heavy. The innovation for us would be to try to build some kind of credit solution that's not predatory, that is actually affordable, because I think a lot of the time what people have access to at in that realm is a financial decision that's often tricky to make, and we're an over-indebted market. So we're looking at BNPL solutions, we're looking at lay-by solutions, but I guess those are the payment technologies that make sense in our domain.
Fascinating. What I love about, David, what you guys are busy with is when you go into a store, you buy one of 10 of the same type of thing, and you're going to probably walk into somebody in Brea Street with the same thing as you, and you're going to try and hide around the corner. What you guys are doing is like you've got one thing, and when you buy it, there's that uniqueness that nobody else like would really get that, because it's been like 4 years since that came out, and often fashion repeats itself, which is super cool. Mo, I want to move to you. I mean, I think from a Mastercard perspective, you guys have an eagle's eye view on what's really happening on the continent in terms of a innovation perspective on the payment side. Tell us a bit about what you are seeing working with different fintechs in Africa from an innovation perspective, and also tell us a bit about, in that perspective, like what you think will happen and unfold over the next 2-3 years on the continent when it comes to the innovation pockets that we're seeing.
That's a loaded question. But I think if we were to break it down, from a disruption perspective, we see a lot of disruption on the continent, specifically from the telco players. So you've got your likes of M-Pesa, who are doing a fantastic job, and they've literally revolutionized banking in Kenya and a few of the other markets that M-Pesa operates in. MTN Momo, I mean, just recently, Mastercard invested in their business because, I mean, they have a distribution network far larger than all the banks do. And they've created this ecosystem, which the banks literally cannot touch. So I think from a disruption perspective, that's definitely a place to watch, and we're trying to play very closely there. Fintechs are emerging on a day-to-day basis because what we're seeing is alternative lending. So alternative lending, apart from mobile money, alternative lending is another opportunity where we see the emergence of fintechs where they are scoring customers. So scoring customers using alternative data models and bringing these individuals into the financial ecosystem or bringing them into the financial world. So that's a good form of financial inclusion as well. And that obviously brings rise to things like buy now, pay later, etc. So credit modeling is something that is growing very fast. Crypto, and I think Jan mentioned it earlier as well, we see a lot of crypto usage, a lot of usage happening, because specifically from a remittance perspective, you send money to somebody abroad, and you don't know where that money is for a period of 2 weeks. Whereas with crypto, you can send that money, or in the form of Bitcoin, immediately, and within a few minutes, the money is already on the other side. So that's growing at a rapid pace as well. I'm going to bring something a bit more closer to home, because this is close to home for us and close to home for Stitch as well. Just recently, we started seeing a decline in card volumes in the Nigerian market. So we started seeing that month on month from this year, 20% sort of loss in card volumes on e-commerce happening in the Nigerian market. And we couldn't understand why. We were like, the economy is going through a tough time, economy is going through a tough time, the de-dollarization, and so on. But then it started bugging us, right? And obviously, card, like I said, we're not a card business. But you can imagine our anguish when we're losing volumes to, at 20% month on month. So we decided to, dig a bit deeper, and the team on the ground was like, well, actually, we have a new competitor, and our competitor it's not the blue guys, it's actually transfers. People are paying with transfers. It's because Nigeria, all the banks have created this open banking network, so they've all got open APIs that fintechs can integrate into, and consumers can make payments directly from their bank account into the merchant's bank account. So this has been around for a number of years. So what do? Mo is sitting in South Africa. My colleagues are sitting in Dubai. We go online, we do some desktop research. Let's go see how it works. And we go through the process. We're like, this is a really clunky process. Who's going to want to use this? Nope, there's definitely something else. So our Nigerian guys are so fed up with us. Eventually they say, just come to Nigeria, come to Lagos, come see for yourself. So a whole group gets ready. Team flies in from Dubai, Mo flies in from South Africa. We get to Nigeria. It's an immersion trip to go and see what's going on. And we get in market, and I kid you not, the most common payment method at point of sale online is pay with transfers. Why? Because you can use it on your mobile phone. It's convenient. Consumers, when it comes to making a payment, and I think the lady from Woolworths mentioned it earlier, you don't say, I'm paying my Woolies bill using Stitch. They just need to make a payment. But consumers look for 3 things when making a payment. They look for ease and convenience. They look for speed and security. So this whole pay with transfers method is very simple. I want to pay a merchant. There's a simple QR code there, and there's a number attached to it. I simply go into my banking app. I can either scan that QR code, I can either punch in that number, and boom, payment is immediately initiated, and settlement happens almost immediately, directly to the merchant. Zero cost for error. Chargebacks are very low. This is a new phenomenon, and Nigerians are very trendy. I don't know if there's any Nigerians in the room, but they've taken to this because it's so simple and so easy on the consumer side. And then from a merchant side, what do merchants look for? They look for efficiencies in collecting payments. And this is just another efficient way of collecting a payment. So we got there, obviously, within the first morning, the Nigerian team looks at us and like, and now? Have a look. You know, seeing is believing. So this is something that we see disruption happening as well. Turkey is another market where a fintech launch. Now, Turkey is very much like South Africa. For those of you, I'm sure many of you know this. It's got a very good formal banking network. But there's this fintech that emerged called Papara, and they came to Mastercard and said, "We're going to take over the banks." Like all fintechs, that come to us today saying, "We're going to be the next unicorn. We're going to take over so-and-so bank, and we're going to dominate." And we're like, okay, here we go. Let's go through the process. Within a year, they were able to get 5 million active customers per month. And we were like, wow, 5 million active customers in Turkey on a monthly basis within 1 year. And we couldn't understand why. We didn't go to Turkey. I would have loved to have gone to Turkey, but we eventually sat down with them to say, what did you guys do? And it was very, very simple. It was nothing to do with, it had a lot to do with AI. So you would love this. But I'm Indian, right? And we love discounts. We love discounts. But I promise you, the Turkish people love discounts even more. So what Papara did was they went to all the key merchants and just, created bilaterals with them and created cashbacks. And on a monthly basis, they would get, as a Papara user, you would get certain discounts that would come into your app. And if you would shop at those merchants, those discounts would immediately apply. And people just started downloading the app, they started using it, and discounts just started flying. Now, is it sustainable? We don't know. But what these guys are now doing is they're using AI. And now they're starting to understand that they know Mo shops here. He likes these type of cashbacks. So now they're starting to give special offers to their customers. And they're doing very well. They're going to be probably bigger than the bigger bank, or should I say the third largest bank, very, very soon in Turkey. I could go on and on, so I'm going to stop right there.
It's amazing, Mo. Incredible insights. One thing what you're saying is, you guys would look at a market in Nigeria and you wouldn't believe the impact that you're seeing of something, and you wouldn't think about that. I think one thing that we've seen at Stitch as well, especially thinking like crypto on-ramping, we found that the clients that succeed the most are the ones that's willing to put their neck out now and then to pilot something and customize it for their user base. We've got a lot of discussions with our clients, and the ones that we've seen succeed the most are the ones that's willing to pilot and figure that out and put it out there instead of just looking at the trends. Because at the end of the day, it comes down to your users. And I think those two examples are incredible from both Nigeria and Turkey. With that said, I want to move to, there's a lot of directors and managers sitting in this room, and I think one thing that we need to acknowledge is, as much as we need to make sure we adopt the right type of payment methods, you need to make sure you've got internal alignment around the strategy and the approach. Now, as somebody that runs and overlooks a payments area of a business, you need to make sure you've got buy-in from the executives, and you need to make sure your strategy is pretty straight up. There's a lot of noise out there, and I know there's people that will sit in the boardroom and will hear, what are we doing with NFTs probably a couple of months ago or a year ago? What are we doing with crypto? And I think from a directive perspective, what is the best approach to take in a business when you overlook this function in terms of looking at new payment functions, and then also making sure that you get the right internal buy-in and your approach is sane given all of this noise that exists in the market. Paulina, I want to start with you and then also want to open it up to the rest.
Okay, so part of the TLG group, we've got a mix of different companies. We've got old school travel management companies that deal with governments and the likes of Transnet. We've got e-commerce players like TravelStart, and all these people come together, and now we need to have a cohesive payment plan in terms of how payments will be handled at a group level. And I mean, it was mentioned on the previous panel as well, that brings in a lot of cultural issues, etc. And I can tell you right now, if you speak to VCs and you talk about crypto, especially depending on the type of VC that you have, you know, they'll freak out immediately. It's so volatile. People are terrified. They don't see the opportunity behind it. So, and then you've got the finance people who want to keep things nice and stable. They want clean reconciliations. I mean, effectively, a large part of payment solutions in the B2B space is just around making the CFO's life easier. I think that was also mentioned by your previous moderator. She made such a good sentence that basically the CFO is pretty much most of the client, is the main client that you're speaking to at most companies. And depending on the type of CFO you have, that's the kind of culture you're going to have running through the group. So rolling out, I mean, even internally, when we're rolling out Glyde within our entire internal group, it provides a cashback to the different entities. And just getting them to change their processes is already a headache. So to be able to move to companies externally and drive adoption outside, you know, at an industry level is a very slow and painful process. Honestly, is there an answer for it? No, just keep at it and show the returns. Ultimately, if you have a product that results in a better return and show the cost cutting, whether it's operational or cutting and processing costs, that's going to get your CFO to agree with it. They don't care what it's called, they don't care how cute it is, they don't care how techy it is. At the end of the day, it's those two things. Make it cheaper and make it easier and more transparent for reporting purposes. So at a board level, those are good things to punt. When it comes to the developers and getting the CTO to agree to it, that's a whole completely different story. Because there's the entire discussion of, and I think you mentioned it about, you know, you want to be at the right point around innovation and disruption. You know, you don't want to be so cool. You want to be just cool enough that everyone's like, wow, you're really awesome. But you don't want to be so cool that people are like, that person's a bit whack, and we have no idea what these processes are, and it's super high risky, and people run for the hills. So it's also finding that right part in your adoption cycle. So, you know, unfortunately, I mean, if you think about it, crypto, like 2008, when like first came out, I mean, it was insane. I remember my personal trainer was trying to like convince me on it. I was like, yeah, I'm not taking financial advice from my personal trainer. Fast forward, I'm like, damn it. Should have also listened to him about more sit-ups as well. But now this would have been really good advice. So yeah, that was a lesson learned there. But the answer to your question is, there actually is no answer there. It depends on your culture, it depends on your company, it depends on your setup, it depends, but ultimately what you want to just show is better returns.
Amazing, thanks. David, bringing you in, like, you work with a lot of investors, like communication of that strategy. I think it relates to the same as just a different audience. Like, how do you approach that, given that you've started various businesses and in the space where payments is a really important component?
Just reframe the question there?
From a founder perspective, you've got a lot of investors and stakeholders on the outside, and getting their alignment on, for instance, the payment journey and the approach you take, which is a holistic business perspective. Like, what is your approach in communicating that and making sure you've got the right buy-in, both internally from your employees, but then also from external stakeholders?
I mean, I think within the context of Africa, it's definitely just like function of a form. I mean, I think, you know, the hard but kind of like messy truth is that transacting on this continent, if we were to kind of speak to the, you know, broader audience, is, you know, fiat heavy. You know, I guess we're seeing a lot of digital insurgence, and it's definitely happening, but it's still fiat heavy. So I guess, you know, look, if I were to speak to kind of like recent anecdotal experience and try to kind of penetrate like peri-urban or rural areas, you know, what did payment solutions look like? Sometimes payment solutions look like, you know, having kind of like a COD functionality with a logistics provider. You know what I mean? Like, sometimes that was the most kind of like purpose-built solution, because, you know, we were actually solving a problem kind of today and now. So, I mean, to answer your question, I think it's very, very dependent on the kind of like ecosystem that you find yourself in. I think if you're trading in the kind of like microcosms that are, kind of Cape Town and Johannesburg and Durban and whatever else, sophistication and, like nuances like fantastic product design and whatever else make a ton of sense. If you're, transacting in the kind of messy middle, sometimes you need to have, drop safes, and sometimes you need to kind of digitize physical cash. So adoption and kind of getting stuff approved, I think is often a conversation around what makes the most practical sense.
Love that, and I think that's part of the reality of this type of discussion that I'm really glad is coming out, because there is a balance to be struck, and filtering through the noise comes down to the end of the day, like, who is your target market? And the user don't care about the payments provider, like you said, Mo. They just care, they want the goods or the service delivered, and whatever is the easiest, that's going to serve the market. The last element I want to touch on, and I think there's people in the room that would want to understand or know a bit more about, is we spoke about payment methods, but there's a dark side to payments as well, which is fraud. We've at Stitch have built significant amount of experience in this area, and one of the things that we've found is just there's so many different areas in, for instance, fraud disputes in the fraud chain that needs to be solved, which is built on Alltech. Quick example: if you buy something now and you raise a dispute with your bank, the process that dispute travels can often take months before the goods or the value gets paused, if anything is still left. Like, how do you solve that problem? And we've had to put our minds to that and starting to develop a platform that can help banks solve this easier, to get to the point of value faster and not having to follow this email chain. We've seen email chains that extends like 60 to 70 emails on one fraud dispute. Mo, from a chargebacks perspective, from a fraud side, what are you guys seeing? And how do you strike the balance of not getting in the way of the client and not like treating everybody the same way? And how do you use AI and blockchain and that type of element?
Yeah, so I know Kian, also when he opened up, he spoke about fraud. I think it's a burning issue. And I think as Mastercard, we take fraud very seriously. Or sort of say fraud prevention rather. We take it very seriously. Cybersecurity, so just to put some context, last year, close to around 48% of our transactions that hit our network were all e-commerce transactions. And we anticipate that to grow. I mean, imagine almost 50% of transactions today already are e-commerce transactions. And it's not just e-commerce as in, going online and shopping. It's about alternate payment methods as well. Globally today, there are 500 million Apple Pay wallets. We anticipate that with Google Pay, Apple Pay, that by 2026, there'll be close to 4 billion of these wallets floating around. And obviously, those are all going to be considered as sort of an online payment or not a, physical, type of card payment. But nevertheless, when I say we take fraud prevention seriously, we've invested in a lot of AI tools like Brighterion, like SafetyNet. And just to give you an example of SafetyNet, basically what it does is that it takes a scoring or takes data of sort of, fraudulent type transactions, or it looks at customer behavior and gives a certain score so that when an issuer goes ahead and wants to authorize a payment, they first go ahead and look at the score. Or when this comes to our network, we have a look, and if the score is at a certain level, we don't even send it to the issuer. We immediately, move the transaction back and we decline it. And just for the first half of this year, our SafetyNet platform declined close to 136 million transactions. That's just in this country alone. So there's been a lot of attempts, and those are transactions that we've blocked. We take it very seriously. We always tell fintechs to invest in cybersecurity. Banks do it, and they do it quite well. Fintechs sort of look at this and say, you know what? Our transaction levels are not yet at a point where we need to invest in cybersecurity. We'll worry about that at a later stage when we scale. And unfortunately, they get it wrong, because when it comes to security, when it comes to fraud, it's not just about if it happens, it's a question of when it happens. And you've got to be ready for when it happens. So I'll give you a quick example, because I love telling stories. But there was a fintech that launched about 2 years back. Now, as fintechs, their valuation is driven by the number of transactions that go through their platform. So this fintech goes live with a card program, and the fintech starts getting excited because within the first month, transactions are skyrocketing. Transactions are moving. They finally, they got it right. They went through the funding round. They went through the pain of launching us. Paulina, she's gone through that pain of launching a card program, but they went through this pain. And now transactions are moving good. Investors are happy. And a month later, all these chargebacks via email starts coming through, these disputes. And now they start realizing that, unfortunately, 70% of the transactions that went through their platform were all fraudulent transactions. And you can imagine their disappointment. And so they reach out to Mastercard, and we obviously help them through the journey. But as a fintech, this is make or break for you, right? Because if 70% of your transactions are fraudulent, you're on the verge of being shut down. So cybersecurity is very, very important. We take it seriously, and we have a lot of tools within our asset base that we use to support it. And I'll just end up with one comment, because I remember my ex-boss always told me that you'll never solve fraud. Fraudsters are very advanced. They use AI machine tools to try and penetrate into systems. So you'll never be able to solve it. But the aim is always try and push it away. And I think you also commented on it earlier. Just try and move it away. Move them elsewhere. Thanks.
Amazing. Thanks, Mo.
You know that on the, sorry, I'm interrupting. With the fraud side, there's also, like they say in all movies that it's usually the killer is always the person that's the majority of the time. So with fraud, also just want to touch on the fact that it also includes internal fraud and internal processes to prevent that. Because I think also fraud tends to always be considered as something that happens external from a company, and when I can tell you most of the time when we've had fraud within our ecosystem, the most painful one has always been that which has been perpetrated internally. So, no.
Friendly fire, eh?
Yeah, exactly.
David?
So, Mo, two things. And I guess one, so, Paulina, you spoke to, I guess, kind of crypto, and I guess people probably have kind of opinions on that, but I think what we could probably all agree on is that, blockchain and the kind of like functional use cases, specifically within the context of finance, are not just prevalent, but probably the future. Just in terms of like central bank-backed digital currency, and so one, how inevitable do you think it is? I mean, assuming globally that's just what happens, right? So if we assume that that's inevitable, what do you think the kind of like peripheral benefits as a byproduct of that kind of I guess like medium being kind of instituted? So like, what do you see? Obviously you would assume that like fraud, for instance, and all of these other things would almost, to an extent, kind of disintegrate, because now you've got this digital ledger and you've got the ability to kind of track. So the two questions there, to Mo.
On the spot. So crypto is an exciting place. Yes, there's a lot going on in the States with lawsuits being filed and et cetera, but I firmly believe that it's sort of weeding out the bad players or the bad actors, if I can call it that. But I do believe that regulation is very, very important when it comes to this. A lot of the central banks feel that they don't see those transactions, so it makes them nervous. So as a result, they've been very slow in providing regulatory frameworks and so on. Although on the flip side, there are mandates coming out from, in fact, our Reserve Bank as well, putting regulations in place to support, CBDCs and so on. So I don't think it's going to happen overnight. I do believe that within that framework, there will be room for fraud, especially in the friendly fire space. But I do believe that it is going to be a very good solve in the future, specifically when all the players come together. So putting together proper sandbox environments, bringing the regulatory bodies, the banks, the fintechs, bringing them all together into this and creating one framework. I think we will find that fraud may not be gone forever, but we may have opportunities to sort of manage it.
And then just one other question in terms of, because this is always, I guess, this is just an anecdotal kind of based on my own experience, and I'm always like, why is this not like, okay, and maybe there's a kind of good reason. I'm sure you guys would be able to to answer the question. Biometrics as verification in payments, assuming again, like AI maybe then becomes a little bit of a scary space and whatever else, but maybe like if we're looking at like retina technology, or like do you think that that's in the soon to be future? Is that kind of going to be something that we're going to see as instead of having to verify in very tedious, laborious ways?
It's there already, right? So biometrics, I mean, having to make a payment with a biometric is there already. It's there today. So we've come together as an industry. So Mastercard, Visa, American Express, Diners. So we've come to, it's called, part of the EMVCO standards. We've come together as an industry to create sort of contactless type payments or one-click payments. But the most important method of doing that is in your registration. So it's all about tokenization. So you tokenize your credentials and then you access it either through a PIN, either through a password, or either through a retina scan or biometric. Your authentication method is up to you, and that gets stored. So, I mean, both Mastercard, Visa, or card payment networks, we've been around for many years, and touch wood, we haven't been sort of breached. So what we've done is we've created, or we've come together as an industry, created this platform where all this information can be safely stored. So we recently launched with PayU, Click to Pay in South Africa. That's one method of sort of removing this hurdle that we have today when it comes to authenticating payments. And I believe that tokenization is definitely the way to go. And if we move into this tokenized world, from a card payment perspective, we'll be able to see a lot more safer transactions taking place.
Thanks, man.
Just a comment on that. We all talk about AI and like the biometrics. Back at the farm, the bankers are dropping files on SFTP folders, and people are reading Excel sheets and aggressively reconciling stuff. So it's this model of disruption where there's so much cool stuff happening in these different pockets. But as Mo said, there's no cohesive kind of solution yet. There's just these little snippets of sunlight coming in, and someone just needs to kind of merge them all together. And just on crypto, anyone who's made a payment internationally with a crypto transfer and have seen how fast, efficient, and cheap it is knows that is 100% the future. It's just a matter of the regulators and everyone kind of keeping up with this. And I think it's actually one of those disruptions which are being forced to slow down because the ecosystem is not ready to handle it.
Thanks, Paulina. Wow. This was a jam-packed session. I just want to give a round of applause to our panelists. This was really great. Our MC for the day is going to shout at me that the audience didn't get time to ask questions, but all of you will be available afterwards to chat through this. And just want to thank you for this, and this is really great. And what I loved about this panel is the reality and the practicality of this buzzy world and this excitement that we have, but keeping things real and actually understanding it's all about the end user and what serves them best. Thank you so much, everyone. I really appreciate it.
Nice. I understand why Dewald was a moderator and not the MC. Thank you, that was a great panel. Mo, you mentioned that you like discounts, so do I, but I don't think my algorithms are connecting correctly, so I need to double check on that. Thank you, Paulina, for a great session, very entertaining. I think I agree a lot with Paulina when she mentions there's so much innovation, but we haven't looked at the basic issues that lie across different industries.